So in this video, I am going to tell you about silver bullet strategy and a complicated thing known as macro. So you better stuck at the video or I call Diddy. So let's hop on our video. So here I want to ask you one thing. What are you looking at on this axis? Time, right? And what are you seeing on this axis? Price, right? That means time and price are superior to anything else in the market. So, I'm going to tell you a strategy based on time and price. Let's begin our video. So, what is a silver bullet? It's a time-based trading strategy with an 80 to 85% winning rate. And what are macros? It's a temporary bias shift in price. If you don't know what bias is, you can check my past video. Macros are the bias of our internal structure. So, let's hop on our chart to understand these things. So, to find the silver bullet, you have to mark out the high and low of the 9 a.m. hourly candle. Just like I've marked it here, you can see how I've done it. After marking the highs and lows, shift to a smaller time frame like the 5-minute or 1-minute chart. Here you can see the high of the 9 a.m. candle. And here's the low. Notice how the market took out the high first. That's a bearish silver bullet. After sweeping the high of the 9 a.m. candle, we can target its low. But if the market takes the low first, we can target the high. Simple as that. In this case, the market took the high first, and you can see how it displaced lower. If we wanted to take a trade here, we'd enter on this IFVG, inversion fair value gap. With a stop loss above this high and a take profit at this liquidity. I know it didn't hit the target quickly, but it also didn't hit the stop loss. After some waiting, it eventually reached the target. So, you can see how valuable this thing is that I've given you. It's like a money printing machine. You just have to place your order, set your SL and TP, and wait for the target to hit. This strategy has over an 85% win rate. The RR increases or decreases based on the size of the 9 a.m. candle, which can give you more than a 1-to-2 ratio, especially since we usually have news around 8:30 a.m. So, here we have another example of a silver bullet. Mark out the high and low of the 9 a.m. hourly candle, then switch to a lower time frame. You can see how it swept the liquidity of the low, so our target is the high. In this range, we only have an entry from this FVG. You can see it right here. If we took the entry from here like this, I usually target a 1-to-2 R to R with a 20-point risk, and you can see how well it worked out. But if you want a better SL with more breathing space, you can go for a 1-to-1 R to R like this, because it eventually hit the target. If you want a more precise entry, you can also switch to the 1-minute time frame. It's not limited to the 5-minute chart. You can see how precisely it hit the target. I don't know what you guys are waiting for. A golden bullet from ICT or what? So, we just learned about the silver bullet. Now, we're going to learn about macros. Let's hop on our chart to understand what macros are. You can see we have a macro here. Now you might ask, what is a macro? A macro occurs between 9:50 to 10:10 a.m. New York time, where the market hunts liquidity from a previous swing or any higher time frame major liquidity. At this macro, you can see how the market swept the high of the previous lower high. It also looks like a Judah swing. If you don't know what a Judah swing is, it's like a bow that first pulls things toward it and then shoots them in the opposite direction. I think this gave enough points to buy a few cars. So, now what do you see in this range, huh? There's major liquidity here, known as EQL, or equal highs, especially visible on higher time frames. This kind of liquidity attracts a lot of attention from both buyers and sellers. Now, along with this, we also have a macro between 9:50 to 10:10 a.m. New York time. So, let's switch to a smaller time frame to break it down further. Now, look closely at the macro time. See how the market induces early buyers, pulling them in with the illusion of a breakout, while at the same time trapping sellers, making them enter shorts only to sit in drawdown without their take profit ever being hit. After that, the market wipes out sellers' stop losses too, creating a clean sweep before reversing. This is the perfect example of how liquidity is hunted and how the macro plays mind games with both sides of the market. But we are smart enough to counter this by entering at the discount range of the order block. Always remember, during a macro, the market creates inducement before hunting liquidity. If you can't recognize this pattern, then you will become the liquidity. Got it? You can see how finely it gave us the 1 to 3 target. Just wait for inducement before the real move, and only enter when your actual setup is there, okay? Otherwise, you're really going to get cooked. You can't use all ICT concepts all the time, but you can apply the useful ones to improve your trading. So, I just told you what macros are. Now, here are all the times when macros occur. I only recommend trading the New York macro because of its high volatility and overlap with the London session. It's not necessary to trade every macro. Study each one, find your edge, and improve your vision. ICT concepts work when you put in the work. That's all I can say. You have to work hard to become better, got it? I think that's it for the video. Hope you enjoyed it. Till then, take care. Bye.